Hey everyone, it's Paul with your Bold Profits for this Tuesday. As I'm in the habit of doing, I want to give you three quick disclaimers, disclosures, warnings, which is first that nothing that you see on this channel is intended to be financial advice. We are not licensed financial advisors. The express purpose of this YouTube channel is to talk about the ideas that are in investment newsletters put out by my publisher, Bold Profits. We've got 8 newsletters, including our flagship one is called Profits Unlimited. It's a multi-cap investment newsletter showing regular people, Main Street investors, how to invest in megatrend stocks, fourth industrial revolution stocks. We call them America 2.0 stocks. There's a link below to profitsunlimited.com if you are interested. The second thing that we want to say is that any of the ideas we talk about here are intended to be long-term ideas. So if you decide to act on something that we talk about, just understand that we are expecting this to play out over 1, 3, 5, even 7 years or even longer. Third thing is that there's a lot of spam activity, scam activity, fraud activities that goes on the internet, trying to get people to send money to other people, claiming sometimes to be me, sometimes my amazing colleague Ian Dyer, or my colleague Amber Lancaster. We want to tell you that anything that we offer you is in the form of a subscription that would require a credit card for you to subscribe. So anytime you see anything in the YouTube comments, or if you see Facebook pages, Twitter accounts, anything anywhere on the internet saying that we're going to manage money for you, that you should send money, that's a fraud, that's a scam. Please never send money or Bitcoin to anybody. So those are the 3 things I want to quickly mention that's in there. Today I want to talk about a mini portfolio that I put up on YouTube a few months ago, and I came up with the acronym, and it was HAPI, HAPI, and it had 4 ETFs in it. And for those of you who are new to the stock market, an ETF is essentially like a mini portfolio, a basket of stocks, if you will, which has a certain theme. Usually it has at least 20 or 30 stocks. Some ETFs might even have 100. And the 4 ETFs that I selected to make up HAPI have 4 different industries or sector concentrations. So the first ETF, which is H, is a ETF that addresses the video gaming market, and the ticker symbol for that is HERO. And the second one, which is the A in HAPI, is the ARK Invest Fintech ETF. And the third one is the 3D printing ETF, also by our friends at ARK Invest. And the third one is a home building ETF. And today what I want to do is just go over the basis for coming up with these particular 4 ETFs to make up HAPI. And I'm doing this by putting up some data and some headlines that I found on the internet. So let's start with the first one, which is the Hero, which is the video gaming ETF. I'm just putting up this headline. Now, the headline's a little bit dated from about a year ago. In all likelihood, the numbers are even better than this. Nonetheless, this illustrates how big of a market this is and how well it's doing. So this headline, which comes from a publication called Newzoo, says that world's 2.7 billion gamers will spend $159.3 billion on games in 2020, and the market will surpass $200 billion by 2023. The pandemic definitely has lifted these numbers, where I would say that these are even higher. Nonetheless, the point is that the video gaming market, that many people may not even know, is actually bigger than movies and television combined. It is certainly, by the total amount of money that is spent in there, the biggest entertainment market that exists. And it is growing very, very rapidly and continues to grow very, very rapidly. You might know that if you are a gamer yourself and you use PS5s, or you've been waiting to get a PS5, or if you're a user of the Nintendo Switch, or an Xbox, and you know the amount of time that you are spending on it, spending money within these platforms. So this is an extraordinary growth industry that continues to grow because it's continuing to take market share from other activities. More and more people choose to spend their time playing games either on their phones or on their computers or using a console. And then we are also seeing new markets for games through virtual reality headsets. I've got an Oculus Quest headset, and we've got a number of games which are a mix of games and experiences which are still part of the same market. So this market is not just growing, it's also expanding out and incorporating new technologies, which is why I believe that Hero is a ETF that has stocks in it that can rise a great deal. And the benefit of owning an ETF rather than any single stock is that you're getting general sort of exposure to the market. However, if you want sort of laser focused exposure, and the benefit of buying one single stock is that usually the leaders in the stock market are the ones that go up the most. And if you're looking for that, well, that's the kind of thing that we do in the investment newsletter. We point people to the particular stocks in an industry, the leading stocks. If you're interested in that, check into profitsunlimited.com. The second one that I want to talk about is the Fintech ETF. Fintech, for those of you who are unaware what it is, it's essentially the digitization of finance. If you use apps like Venmo or Cash App, or you use PayPal, if you're beginning to use apps like Acorn or Chime, this is an example of what Fintech is. It takes something that previously required you to perhaps go to a bank and do all of your financial activity through them. Instead, you can just pick up your phone and do a lot of it using your phone. And these companies have made it very, very easy to do things that in the old way were very bureaucratic, very expensive, and also very time consuming. So Fintech is a market that really has exploded as a result of the pandemic. As people stopped taking cash, everyone went to online everything, and the use of these apps has really exploded higher and worldwide. And based on what is going on, it does look like Fintech is going to continue to take market share from banking and insurance and what I'll call old line finance. And the forecast which I found online from a research organization says that the fintech market is expected to grow gradually and reach a market value of about $305 billion by 2025. We're already in 2021, so this is going to be pretty rapid growth at a compound annual growth rate of about 22%. And just for those of you who are wondering if 22% is a high or a low number, I can tell you that's a very high number. Go take $1,000 and compound it at 22%, and you will see that you are getting to very, very high numbers very, very quickly if you're using 3 years or 5 years. So 22% is a very, very high rate of growth. And the ARKF ETF has a lot of the leading companies like PayPal and Square. And there's actually a lot of these companies have come IPO or come public using the SPAC process in the last year or so. So these are all included in there. So if you want to get sort of wide exposure to the fintech opportunity, ARKF ETF is a good way to actually get access to it. The third one that I want to go into is actually my favorite, which is 3D printing. Most people, I believe, really have far too little 3D printing in their portfolio because it's underappreciated. 3D printing sort of went through a hype cycle where the stocks went up. However, their technologies were immature. Their businesses were even less mature. Today, their technologies are very useful, being widely implemented across lots and lots of industries. There are so many new materials that can be used from metal, whereas back then it was just one. And the opportunity is extraordinary right now. So this is also from a research firm I found on the internet, and they said the global 3D printing market was valued at $13.78 billion, which is pretty small in terms of where it is, and is expect to expand at a compound annual growth rate of over 21%. Truthfully, some of the other ones that I found were much higher. However, this one had a tremendous chart, and it also showed you a lot of the different submarkets in 3D printing, which is why I chose to go show you this one. And within the PRNT ETF, which is the one that is in HAPI, I would tell you that they've got very wide exposure to pretty much every single 3D printing maker that's out there and a lot of businesses that are going to benefit from it. I can tell you across our services that we have, and we've got 5 stock picking services. We're all in on 3D printing. We think this is a revolution that is going to completely upend the world of making things, everything from houses to furniture to pretty much anything that you see. You are going to see 3D printers start to make it. It also has a very huge role in what is going to unfold as we explore space and put lunar colonies up and go to Mars. So 3D printing, we think, is a long-term, massive, huge, high-growth opportunity that can be sustained for a very, very long period of time, which is why it's one of the ETFs that is in HAPI. And the last one that I want to talk about is the housing market. And truthfully, in our services, we sort of approach the housing market by buying into newer stocks than, say, things like home builders. For example, a retailer like Wayfair that is online. This is one way to benefit from the housing market. However, for HAPI, we've actually used just a regular old-fashioned home builder ETF. This has got all the major home builders in the United States. It's also got stocks like Home Depot and others like it. And this headline will really show you how big this opportunity set is, which is that the U.S. housing market is nearly 4 million homes short of buyer demand. 4 million. That's a lot of homes. And just to understand that for anyone to put up a home, you first have to obviously get the land, then you have to go through permits, then you have to grade the land, then you've got to accumulate all the materials, and you have to have the labor to do it. This is a very complicated, time-consuming process that can take anywhere from as little as 6 to 9 months, maybe a year, to as long as 3 years, depending on how complicated the particular build is or where the land or the location is. And this is stimulating a huge, massive bull market in housing in the United States that is going to persist for a long period of time. I would estimate 3, 5, 7 years, but potentially even 10 years. So that's the underlying basis for HAPI. I call it HAPI. I know it doesn't actually spell happy in the official way. And it's comprised of the video gaming ETF, the Fintech ETF, the 3D printing ETF, and a home builder ETF. And through it, you kind of capture what we focus on at Bull Profits and that all of our newsletters are laser focused on. We call it America 2.0 or the Fourth Industrial Revolution. For many people, it's just the implementation and adoption of new technologies and these things that you're reading about here and there. However, you may not be exposed to it in your portfolio because the old line portfolios, things that are in the S&P 500, they still largely are invested in sort of the technologies, products, and services of the old. And the companies that are largely in these ETFs, they're smaller, they're mid-sized at best, and they really give you exposure to these opportunities in a big way. However, if you want the leading companies for all of these areas, then you should subscribe to our newsletter. Profits Unlimited is the gateway, if you will, to all of them. Try us out. Obviously, if you like this video, please give us a thumbs up, subscribe to the video, comment below. I know HAPI has not done particularly well recently. That has to do with the fact that growth stocks have been going down, and these are all stocks that are growing. However, the future is bright, and I believe they can soar higher. So if you bought previously as a result of this, please just hang in there. We're continuing to support it on YouTube and through our Bull Profits Daily e-letter. So that's my video for this week. I'll have another one for you next week. Until then, this is Paul saying